Hello, I'm Dan Passarelli from MarketTaker.com here on the floor of the CME Group. One of the trades we talked about today in our Market Taker Live Advantage Group coaching class was in Lululemon, symbol LULU. Take a look at a chart of Lululemon. You'll see this stock has been in an uptrend since around the middle of May, had great earnings in June, has broken out from a bullish base, and is just overall on a tear. So I think that especially in this market, Lululemon can continue going higher. In fact, I think even if the market overall pulls back, Lululemon is so strong it can outperform, so I like buying calls in Lululemon. Now, a little backstory, I looked at a couple different bullish ways to play Lululemon, including selling put spreads and doing call spreads and all that. But the reason why I'm settling on buying calls is because implied volatility in that stock and in the market in general is so gosh darn low right now that they're practically giving away options. It's so cheap. So the specific option that I like is buying the August 77.5 calls. At the time I'm shooting this video, you can buy those for about $2.45. I think that there's some potentially great leverage profits that can come out of making this trade with pretty low risk. If Lululemon reverses itself, I would just simply have a stop loss and only risk maybe about 75 cents maximum on this trade. And if I get stopped out on that, that's fine. Very, very low risk, especially with the calls being so cheap. Worst case scenario, I can lose what I paid, and you know, they're 5-week options, so I love it. Now, if Lululemon goes my way, I think I can make a 50% to 100%, possibly even greater profit, depending on how it all plays out. So I don't like being too greedy on trades like this. If I do a 10 lot, if I can take about a 50% profit, I might sell half of them, take a profit, which just simply lowers the cost basis of the remaining 5, and then let those play out. This is Dan Passarelli of MarketTaker.com here on the floor of the CME Group.